Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Thursday afternoon, we have Max Cabasso, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. Max, it's great to have you with us. Welcome to Trade Talks, and really a stunning reversal from this morning when futures were down, 1, 2, 3%. Now we have companies like Apple, Google, PayPal up, over 2% each. Amazon up over 3%.
Yeah, thanks, Phil. It's actually been quite the reversal, as you said. We opened up right at key tactical levels here that we're watching. If you're looking at the Qs here, it's at 320 level, 317, 320, which is some of the Fibonacci retracement levels. So again, we were pinned right to that this morning. We saw that reversal pretty early this morning. We started to see a reversal and then kind of flattened out a bit, waiting for the president to come out and make some comments, obviously, on the current situation in Ukraine with the Russian invasion. So, once the president came out and we saw kind of what the sanctions would be and who would be threatened with these with the sanctions, we started to see again the rally start to pick up. So again, we've had almost a 4% change since this morning's lows.
Yeah, it really has been. I mean, since, the headlines hit around 2:33 a.m. Eastern this morning, and I guess with some of that uncertainty being removed with the president outlining and detailing to a certain extent what the sanctions were going to look like, the fact that it's a coordinated effort with Western European nations and, of course, with NATO backstopping that, it just removed a layer of uncertainty that existed in the market because, Max, it feels as if the past, let's say, week and a half, 2 weeks prior to the Ukraine headlines, the market was somewhat, I don't know if bottoming, but digesting interest rates and what's happening with inflation, and there kind of was a course ahead. This got thrown in there over the mix on the weekend, and now that some of that uncertainty has been removed, and one half session isn't a market make, but it just goes to show how markets just don't like these fast and furious headlines and the uncertainty that's been inserted.
Absolutely. One of the things that we've been watching, obviously, has been inflation. We could obviously see that tick up now more so with the potential energy crisis, but interest rates, we're seeing expectations now. The conversation was going to be between, is it going to be 25 basis point raise in March by the Fed or 50 basis points? We're really starting to see, I think it was last week, we got up to about a 60% chance of a 50 basis point hike, which obviously is going to put a real damper on any growth stocks. We've seen that reverse. It's now essentially priced in just a single rate hike in March, in the upcoming meeting. So that uncertainty, like you said and talked about, has come off a bit. So that, is it going to be 25? Is it going to be 50? Is there going to be a surprise hike, an emergency meeting? That seems to come off, even though inflation expectations are still there. They're still going to be hit, but I think the expectations of that 50 basis point hike and that shock hike that really could knock people off has really started to come off with some of the global turmoil that's going on. So again, I think it's really that 25 basis point climb that's going to be what's priced in at this point.
Right. And Max, to wrap up here, whether we're looking at the Nasdaq-100 or if we want to use the Qs as a proxy, what are some key technical levels that you're watching, whether if we hit a level on support that's going to create more of a flush, or if you're looking for to hit certain levels at resistance that could potentially take this even higher? What are you looking at here?
So I think the first stop looking at to the upside is this 340 level. It's kind of that first spot we were watching to the downside, which we hit in January. First time bounced off of that, came back there a few days ago and kind of fell right through and then stuck that 320 mark on the Qs. So again, 340 to the upside. We're a few bucks away from that now. If we can get through that 340, again on the Qs, probably going to move back up to that 350, 353 mark. But I think that 340, especially in days ahead, is going to be the more important level to watch, especially with how sharp the rally has been today. Is it a relief rally or is it something that's going to be prolonged? So I think that 340, you said on the Qs as a proxy, is going to be the key one to watch.
All right, Max, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.